Good morning, everybody. Good afternoon to my friends across the pond in Europe. Welcome to the State of the Market. Today, I'm going to be breaking down what's happening in the market and why. We're going to talk about the ever declining volatility index. And I'm going to talk about what that means for market expectations and how we can use the information options give us to predict pricing. So let me send out a closing profitable order for one of our services, and then we shall move along. That is done. And now we can dig into what we're seeing in the overall market. As we open today, we're about 35 minutes in. The Dow ever so up a little bit, while the S&P 500 down a little bit, and really the NASDAQ is the one feeling the pain. The NASDAQ has really shown a pretty decent amount. It's been moving, even as it's been climbing, it has been moving more than the other indexes. You're seeing, I think, an increase in volatility out of a lot of the Mag 7 names. So like Apple, kind of the laggard of late, it keeps trying to dip. I think it's eventually going to get itself 203. But you can see Apple looks weak, but, Amazon, it broke over 220, but now is stuck in this range. Broadcom has been up, has been down. Today it's down. Yesterday it's up. Kind of continue to climb higher, but we are seeing an increase in kind of the daily movement here, even as the indexes themselves move less. And it's because, you get these days where all the Mag 7s kind of move together. And today is one of those days, right? Google's down, Amazon's down, Microsoft is down, NVIDIA's even down, which I didn't think was possible, right? This is NVIDIA. All it does is go up, but NVIDIA's down too. So you have this positive out of industrials and kind of the rest of the market, but then you get the Mag 7 pulling us lower. And, that's, you end up with the NASDAQ down, the Dow up, and the S&P pretty flat. I want to talk to you about real briefly about when real life crosses paths with the markets. So last night in passing, Lauren, my wife, bigblondehair.com, if you will, says to me, "Oh, I knew this was coming. I'm so excited. McDonald's is bringing back the snack wrap." And then this morning, I look on the news, and one of the major articles I see is Goldman upgrades McDonald's, citing the return of the snack wrap. And lo and behold, you can see McDonald's is having a nice day. Folks, the snack wrap is real. The snack wrap is real. So I thought that was kind of funny. All right, now that I've got that out of the way, let's talk about what's really been dominating the market. And the answer is VIX. At any given time, there is... Hannah asks, is Lauren dropping a stock picking service? No, but she is dropping a snack picking service. So if you're wondering what the best snack is, she's your girl. Now, circling back, at any given time, there is kind of one catalyst for the market. There's something traders are always paying attention to. Over the last few weeks, we've seen that rotate real quickly, but it's now settled in the volatility index. And so what do I mean? All right, let's start with what initially was driving things. And the bond market, you look at what happened in April with bonds, right? TLT over the course of about 7 days fell from 95 down to 85. It's a good 10% drop in long-term bonds. What happened with the market during that period of time? Well, you can see we had some ugliness. After that, it was oil and energy. And you look at the way energy rallied through June, and then look how choppy and sloppy the market was during that period of time, right? As we were having the 12-day war, look at the choppiness you're getting out of the market. And what I want you to notice is that as oil was spiking in the, from June 13th through the 20th, take a look. SPX trended lower. And then when we got a peace deal and oil tanked, the market was free to kind of move on its own. Now they've decoupled. Oil and the S&P can move together. So what was next? NVIDIA and the chips. They went on this wild run, and the S&P blew higher. Now that we had this wild run in the chips, what is our dominant number? It's the VIX, option prices. Now, people get nervous when we talk about the VIX, the volatility index, the fear gauge. I'm here to tell you that the term fear gauge is lazy and ineffective and not an accurate way to describe the VIX. What the VIX tells you is how expensive are options. How much does it cost in general to buy an option? That is all the VIX is telling us. So the VIX is going up. Insurance prices was what options are an insurance tool. Insurance prices are going up. All right. That tells you hedging a portfolio is more expensive. When the VIX is dropping, it is telling you option prices are easing. The market is becoming more relaxed. Now, one piece that will generally move opposite of the VIX index is skew. So I'm going to show you an index. This is called SDEX. It's the Nations, my friend Scott Nations. He has a skew index that he runs. And I want you to notice, hey, when we hit these worrying points, skew goes way up. And when, even as volatility was coming in, this skew index is kind of holding its place. So what does that tell you? It tells you near the money option prices are declining, but out of the money options are holding a little more value. So what that translates to is this. Traders are no longer buying fear of the immediate. All right. If I knew my house was about to burn down, I would buy an insurance policy with zero deductible and a high premium. And then I would watch my house burn and I'd cash it in. That is what a VIX that's high tells us. Now, if I'm just buying insurance, I'm going to take, and I'm not worried about anything, what I'm going to do? I want a lower premium and a higher deductible. So when skew is high, but VIX is relatively low, what is that telling you? Traders are buying the high deductible, low cost policy. Why? They're not worried, but they want stuff just in case. All right. So think of option skew as How expensive is it to buy that emergency policy in case something happens, even though you're not worried about it? And I want you to think of VIX as your measure of what does it cost to insure my house against a fire right now? So when we hit these low vol markets, options that are further away tend to be more expensive, and options that are near the money become less expensive. So, why is this so important? Because it allows for us to really predict where the market is going to go, how it's going to move. You're saying, Mark, you can predict how much how the market is going to move. I can indicatively and intuitively, and I'm going to absolutely show you how to do this. But certainly, one thing to be aware of, and then I'm going to show you how to do this. When you're looking at VIX, is the VIX tells you how expensive is it to buy options, and then we go out and look at this thing called futures term structure. And it's kind of the market's best guess of how much cushion is the market giving itself against a major sell-off. When the market has a bigger cushion, that's telling you they're still out buying those out of the money options. So right now, the market has a huge cushion for itself. Now, if I bought myself a big cushion, am I worried about the market falling? No, because I have a cushion to land on. So when we see a big cushion, like we have here, right? The cost of an August future is 1920. VIX is 1596, $3.25. Normally, it would be about 250 right now. So we've got a ton of cushion, which tells you the market thinks VIX is going to go lower and the S&P 500 is going to go higher. And when we see this cushion develop, now what that's telling me is that this is a market where patterns, predictable patterns that we talk about here at Option Pit, are going to work at their finest. When the market is wild and volatile, we have great strategies for that. When the market is low, when VIX is heading toward sub 15, we have amazing strategies for that. In fact, every strategy is going to work in every market, but because they all pass CRT, remember that's consistently profitable, repeatable, and teachable. Every product we run is going to have CRT. That doesn't mean that there aren't going to be different opportunities across each one. A VIX below 16, a VIX in the 15s, a VIX in the 13, it down to 13. This plays directly into 0DTE's hands. Why? Because trends that happen will tend to continue to happen. So you're going to notice when VIX is lower, when we're up, we tend to stay up. And when we're down, we get a little bit of a bid as the day progresses. That is what this is telling us. It's also providing us with tighter ranges. A low VIX means less movement in the market. Less movement in the market means I can set a cash zone, something you're going to learn about immediately following this. I can set a cash zone inexpensively in an area where I'm likely to win. So now let's talk about how we predict those movements. And the answer is in your option prices. Folks, option prices almost always hold the answer to every question you want to know about the market outside of what it's going to do tomorrow. So I can't tell you right now whether we're going to be up or down on Friday. However, I can tell you how much we're probably going to move. As the day progresses, that's a little different. I have a real good idea on where we're going to move today. All right. So let me talk about how I'm going to predict how much we're going to move tomorrow. And then I'm going to show you how much we're going to move today and how that applies to my cash zone. So I want to go to July 11th, the second Friday of the month, our expiration. All right. Now, I'm going to cut this so that it's easier to see for you guys. You guys know I love my paint. All right, now you all should be able to see this. Give it a little bit more. You should all be able to see really easily what I have going here. Let's use the blue. We'll use blue. All right, now I want you to pay attention to the 6260 strike. That's right here. And then I want to pay attention to the value of the calls and the value of the puts. Folks, this is something you can do at home. There's no secret sauce here, folks. My calls on the 6260 strike are $18. Maybe I should work on the cursive book with that I've got Valentino on and Mark for my own writing, huh? My put is worth about $16.30 here. If I add these together, right? So if I buy a 6260 call expiring tomorrow, I am betting that the market is going to be above 62.78, right? By the end of the day, Friday. Break even is 62.78. All right. If I buy a put, I'm betting that the market is going to be $16.30 lower than 62.60. So I'm betting that the market, my break even here, is going to be 62.53.70. All right, each of these is a bet on movement. All right, now, what if I thought the market was going to move a lot, but I wasn't sure on the direction? I would just add these together. 18 plus 1630, $34.30. So if I'm betting, if I put a bet on long the put and long the call, I'm no longer betting on a winner, either call or put. I'm betting on the total score, right? The straddle price, which is another word for buying a call and a put, is like betting on the over in a basketball game or a football game or a baseball game. So between now and tomorrow, the market is making your over under 34 points. So we're either going to be right up against 6,300 in the cash in the S&P 500, or we're going to be somewhere around 62.25 tomorrow. So how does this apply to my trading? Well, when I'm trading 0DTE, the first thing I look at is how much is the market thinking we're going to move today? Well, we're currently trading 62.55. We've dropped 7 points since my last. This is my last trade. And so we're sitting right at 62.55. All right, let's get a nice picture of that at the money option here. We'll do the exact same thing here, folks. All right, so now looking at this price, all right, the market is betting $9 that we'll get, that week will go above 62.55. My call is 9. And it's betting $9.20 that will go down. So my total over under is $18.20. Now, what does this mean for you? Now, in a moment, you're going to see a lot of real information about how I apply this to 0DTE. All right. In a minute, you're going to see how I apply this to 0DTE. But I'm going to give you kind of a quick look under the radar. All right. Let's talk about this $18.20. Who here thinks the market is going to go up into the close? There's no wrong answers here, guys. Tell me, do you think the market is going to go up or down into the close? We got a lot of ups. Nobody thinks down, huh? Oh, there's Blue Dog. Good. Thank you, Blue Dog. All right. And W. Danabelle says down, but I'm seeing a lot of up. All right. Now, I just told you the market is going to move about $18 between now and the end of the day. All right. What would you, if I thought the market was going up, does it make sense for me to buy a 62.75 call? All right. Let's go back to our trading screen. Does it make sense for me to buy a 62.75 call, knowing that we're expecting about $18 of movement away from 62.55? No, it doesn't. Why? It's way out of it's more than $18 out of the money. So I'm going to give you guys a big zero DTE tip here. And this is a part of how I set up my trades always. If I want to make a bet on a zero DTE play, I never, ever buy a call or put that is outside of this price. So looking at SPX and those 62.55 calls, or the 6260s now. You can literally just put this straddle price on your Thinkorswim or whatever analytics you use. All right. And so I can buy the 6260s, the 6265s, the 6270s, and it's telling me if I really want to, if I'm 6275 is about as far as I can go from 6260. And even then, I'm probably going to break even. On the downside, I don't want to buy any option that's a put below 62.45. Because this pricing is basically telling you if you buy anything outside of here, you're basically taking a YOLO shot. Congratulations. Go on Reddit and you can talk about your YOLO play. Here at Option Pit, we talk about strategic advantage and plays that have a positive expectancy. So if you want YOLO, I'll buy more Reddit stock and you can go over there. But if you want plays that have positive expectancy that work to your advantage, the only options you're ever going to trade on zero DTE, these are options that expire today, that you buy today, that expire today. The only options you will ever buy are inside of this price. And when I'm setting up a cash zone play, my cash zone always starts inside of this straddle. And this is a great question. When do I use the straddle price? As the day progresses, right? At 3 o'clock in the at 2:30 in the afternoon, I may want to make a bull play into the close. So what do? I pull up my straddle price. All right. And then I can set my target. And my target is typically going to be somewhere toward the edge of this straddle. Maybe it'll be just outside sometimes. You're saying, Mark, why would you set it up outside? This circles back to skew. Remember at the top of the show? See, everything I say to you guys has a purpose here. Remember at the top when I was talking about that skew and how out of the money options will get more expensive? So if I buy with a low VIX, cheap options inside of the straddle, and we know skew, those options that are kind of my protection, where I'm not worried, when I know those are going to be more expensive, well, now we're starting to build something that works to our advantage. Right? If I buy inside and then I sell that expensive garbage outside, I've now set up a trade that works strategically to my advantage. So, folks, what I would invite you to do, if we want to make me full screen here, what I invite you to do is to stick around and watch this presentation on cash zones. I kind of laid the groundwork for it with you today, but you're going to learn a lot more. Hannah and I talk in some deep detail about cash zones. So what I'd like you to do is stick around for this video, enjoy it, and if you've got questions, you can post them here and we will answer it. All right, everybody. I am Mark Sebastian. I am the founder and CEO of OptionPit. And between CRT and what I just taught you, I want you to pay very close attention to this video. I am your only option. Let's roll it. Today, I'm going to show you how you can make an extra $204 per day in the stock market trading a single stock with only a $1,000 investment. That's a 20% return. That's verified. And you're going to see the full trading proof, all of it. Hold on, she's here. Hey.
Hey.
Glad you can make it. All right,
Sorry I'm late.
Totally okay, we're just getting started.
Okay.
Let's get down to business, get you mic'd up.
Okay.
All right, back to the action. I'll introduce Hannah here in a second. The single stock I trade is highly liquid. It's in 99% of portfolios. In just a few minutes, I'll tell you the name of that stock. It won't surprise you. You definitely know the name and you might even own it. But owning the stock doesn't mean you automatically get the most out of that portfolio. The days of thinking like that are over. That's the key. Does simply owning a stock make it work hard for you the same way you work for your money? Not usually. The truth is, most Americans are going to struggle with their investments over the next decade and beyond. The market is consolidating. Pockets of individual stock opportunity are drying up. And that's not because of the economy, who is president, or even the Federal Reserve. The market is changing because trading is now the dominant force to make money on Wall Street. And trading is about making money now, today. That's important. I need you to understand that, so I'm going to repeat it. Trading provides you an opportunity to outpace traditional investments, including dividend stocks, real estate, commodities, you name it. Let's follow the money. A decade ago, investing in stocks outpaced trading 2-to-1, easily. Over the last 10 years, trading has been growing and growing. And on October 2nd, 2020, for the first time in history, more options were traded in a single day than stocks. This means more options are traded than stock every day. And of the options that are traded every day, over 43% of them are a specific type of option, the type of trade we're going to focus on today. This is the leading trend in the market right now. The proof is undeniable. It's inevitable. The good news is that you are still in the top 1% of investors or traders if you follow what I'm going to show you today. You're about to be ahead of the curve. That's my job. I want you to see the writing on the wall and then say to yourself, he's right, I'm going to need a better way. That better way is the 20% per day generated by my strategy using the cash zone. So let's get into it. This strategy is an overlay on top of owning stocks long term. What does that mean? We never want to stop investing, but we need to find opportunities for growth that follow the money. And nearly 7 out of every $10 is moving to trading. Investing is crucial to anyone's long-term retirement outlook. We want you to own stocks, but we also want you to know where the real money is playing. And it's not in buy and hold. It's in trading. The S&P 500 grew this year because of 8 stocks. That is consolidation if I've ever seen it. The days of finding emerging markets, emerging tech, emerging stocks are in the past. Why would 70% of Wall Street money be using a strategy like Cash Zone to make their billions?
because trading is where the money is, and it's only getting bigger. This strategy is a way to take your ho-hum 8 to 10% stock return each year with a traditional S&P 500 fund or using a financial advisor, which, by the way, I'm projecting 8 to 10% will diminish quickly given the volume into trading. But given those facts, it's time to make trading a much larger part of your portfolio, way more than some random stock pick. The big money makes trading its most serious way of making money. Why are you still looking at underperforming stocks or some long shot story? So speaking of serious trading, my Cash Zone trading has the ability to put $200 in your pocket every trading day, and that's on my smallest possible position size. So now that we're all on the same page, I have a trading surprise for you. The trades we're making have 3 secret advantages we'll get into. Plus, you don't need to be an expert to do this. Over the last year, I've trained retirees, engineers, data scientists, even a cattle rancher who makes trades from his tractor. Hundreds of traders from brand new to experts, all using this strategy. What do they know that you don't? Well, my name is Mark Sebastian. I traded options on the Chicago Board Options Exchange for nearly a decade and have been a professional trader for over 20 years. During that time, I've learned things average traders don't know. And since I left the SIBO, I made it my life's mission to create professional level money-making strategies anyone can learn. I'm going to tell you something my old colleagues are not going to like. What professional traders do is not magic. What your financial advisor does definitely is not magic. It's not super complicated, but the less they reveal and the less the rest of America knows, the easier it is for them to make money. Here with me today is Hannah Selner. She's built, tested, and approved dozens of trading strategies people have paid millions for over the last decade. Her job is to confirm that all of our strategies work for everyday Americans. That's what she does, and she has a system. But more on that in a second. Like I said, she's been doing this for a while. She knows what works, and more importantly, she's seen what doesn't. She's your advocate. She's basically representing you in this discovery presentation. She's not a professional trader, and it's designed that way. She checks track records, she reviews strategies to make sure they're approachable, and then she makes sure the trade is repeatable. Welcome, Hannah.
Hey, Mark. I'm happy to be here. And welcome to everyone watching at home.
Hannah, tell everyone why I asked you here today.
Well, Mark and I have been friends for years. He knows my background building and testing trading products. And about a year ago, he called and told me he was onto the biggest discovery of his career. He told me about a single stock strategy where he could leverage the world's most popular new asset class in a controlled way. He was talking about zero DTE options, which stands for 0 days to expiration. I knew about zero DTE, but I did not know about the Cash Zone Mark built and how he was using it to play one ticker. That really got my attention. I thought it was simple, smart, but did it work? That's what we're here today to talk about. And I'm going to slow down. I'm getting ahead of myself. I get excited when we're talking about making money.
Today, Hannah and I are going to show you why my Cash Zone is the #1 way to pull daily income from the stock market, why I'm virtually certain it will stay this way for the next decade, and why you need this strategy now so you don't get left behind. Hannah, I'm all yours.
Mark, first I want to go back to your experience at the SIBO because that's the origin of the Cash Zone. Tell us a little bit about how this all started.
I was at the SIBO from 2001 to 2009. That was back when people executed your trades, not machines. Make no mistake about it though, professional traders can still have an edge. And I do this with this strategy. The reason is machines are predictable and they only handle large quantities. When you handle large quantities of billions in assets, you miss things, even if you're a computer. What they miss presents us with opportunities. That's how I built the cash zone you talked about, Hannah. When you combine that with a simple one stock strategy, that's how I've generated $204 a day on average. Believe it or not, I got fired from my job at the SIBO to be replaced by a machine. I didn't take it personally. To be honest, it was one of the best days of my life. It shouldn't have been. I had a newborn at home. My wife was totally freaked out, but I knew I was leaving my job with knowledge that less than 0.1% of people have. I knew I could easily translate my level of expertise to make money. And in May 2022, I got the biggest opportunity of my career handed to me on a silver platter. This went completely unflagged on the American radar, but it was the biggest singular catalyst in options trading history. What do I mean by that? I'm talking about this. The day the SIBO announced that instead of 0DTE options expiring 3 times a week, they were going to expire every single day during the week. The SIBO had poured gas onto a fire that would become the most popular money-making industry in the world over the next 2 years. 0DTE options account for 43% of all option trades every day, and that number is only going up. And since option trades account for 70% of all money moved through the market, that makes them roughly 1/3 of the whole market. Now, do you still want to go take a flyer on the next stock pick of some CEO on CNBC that was touting electric eels being the future? No, and neither do professionals, and neither should you. You should want to learn to trade in the warm end of the pool. This is what I was talking about earlier. 0DTE options are close to half of all options traded. So watching this presentation should, at the very least, give you insight into the newest, most advantageous money-making asset of the next 30 years.
So if I'm following, here's the trend. In October 2020, options are traded more than stocks for the first time. 2 years later, a new type of option trade was made more easily available, from 3 days a week to 5. Speed up to today, and that new type of option trade accounts for nearly half of all options traded every day, which again is still more than the stock trading volume. So if I'm not mistaken, that's the most money in the market moving into this type of trade.
Exactly. Over $1 trillion a day.
Wow.
I repeat that. $1 trillion per day. And here's the thing you need to know. $1 trillion of 0DTE is affecting your trading. It's affecting your long-term options, short-term options, and straight stock swing trades. And it's also affecting your investing. That's why I'm here. I've had success with 0DTE that can change your future.
So this opportunity is huge. The money is there.
Absolutely. And if we know anything about the brokers and market makers where I used to work, they're always going to be first to a trend. 0DTE has been no different.
Mark, let's talk about the stock you're trading 0DTE on. I know our viewers want to hear that, and when we first spoke, this was what attracted me to this strategy, the simplicity. Because you're using 0DTE options on just a single stock.
Yes, and I'm going to give you that stock in a few minutes. But first, I need you to understand something. There are 3 secret advantages you get when you trade this. And those 3 advantages are why I trade 0DTE and just this stock. I'll get to why in just a second. Here's what you need to know first. Every day, the market is 100% guaranteed to do 2 things. 1, it's going to open up at 9:30 a.m. Eastern Time. And 2, it's going to close at 4 p.m. Eastern Time. Every day it closes, there will only be 5 stocks with 0DTE options that expire. Let me say that one more time. Every day the market closes, only 5 stocks have daily option expiration. Before I tell you what they are, here's what I mean by that. Every option has an expiration date. Think of it like an expiration date on a carton of milk. When that expiration date hits, the milk is bad. When expiration hits on an option trade, your trade is over. You either won or you lost. Some stocks have options that expire every month. Some have options that expire every week. And only 5 in the entire market have options that expire every day. They are the NDX, the QQQ, XSP, SPY, and SPX. I trade SPX. This is the stock I refer to at the beginning. And believe me, one way or another, you own part of this stock. SPX is the stock I'm trading every example you're going to see today of my cash zone trades. SPX is actually an index. You probably know it as the S&P 500. It tracks the performance of the top 500 publicly traded companies in the United States.
So is that why you trade SPX over the other 4?
That's just the start.
Okay.
There are also 3 secret reasons, and they've made trading SPX the easiest choice a trader in the know like me could make. Number 1, it's the most liquid options in the world. It's not even close.
To translate that for some of our viewers who may be new to these kinds of trades, you want a liquid stock because it allows us to recommend trades that anyone can get into. You never have a problem of getting in or out of the trade. Think of it this way. Liquidity means that when we recommend a price, you stand the greatest chance of getting that same price for longer.
Exactly. It takes seconds to make a winning trade at the right prices, which I'll show you how to find. Number 2, and this is big, SPX is cash settled. That means at 4 p.m. each day, if you're up, let's say, $200 on your trade, that $200 is deposited directly into your trading account the next morning. You never have to risk taking delivery of stock if you hold through expiration. That means the account is settled at close of business. Buy the option, play the trade, close it out.
Let me make sure I'm hearing this right for our viewers. When you trade SPX, you don't even have to close the trade if you don't want to?
No, you don't. That's the beauty of SPX. You can just let it expire, and the cash drops into your account. See, if you buy a 0TT option in QQQ, you have to close it before 4 p.m. Otherwise, you're going to get assigned 100 shares of QQQ stock for every contract you own. At $520 a share, that'll cost you $52,000. You don't want to let that option expire on you. That's not how it works for SPX, and that's why we trade it. You're never at risk of delivery of more than you bought. Never. That's what cash settlement means. Whatever money you're up at the end of the day when 4 p.m. hits, that's what you make. And yes, you don't even have to close it if you don't want to. The profits literally show up in your account the next morning. This is one of my favorite things to teach and show my subscribers. They can't even believe this is something real they didn't know about. The stress they used to feel around option assignment doesn't apply here.
We actually have some testimonials here from your subscribers on this. I love it. They didn't even know this was possible. So SPX is extremely liquid. It's cash settled. What's our third secret advantage?
Number 3, you actually keep more of the money you make on every trade with SPX tax benefits.
I like the sound of that. Tell me more.
Right? Let me explain. Any trader knows the profits you make from the stock market each year are taxed at your income tax rate. So you take home $100,000 income a year. You're in the 24% income tax bracket. And your stock market profits are taxed at that same rate, 24%.
That's an ouch.
And that's actually one of the lucky ones. Income tax rates can go as high as 37%.
Yikes.
Meaning, if your income tax rate is 37% and you make $100,000 a year in trading profit, you only keep $63,000. That's just wrong. Now, if you make the same 100 grand trading only SPX options, which is what we're doing here, and you have the same income tax rate of 37%, you take home $70,800.
Wait, that's more than $7,000 more. What kind of a loophole is this? How does that work? You're telling me I can have a 37% income tax rate and I do nothing differently, just trade SPX instead of something else, and I take home more of my winnings, 7,000 more?
Yeah, you nailed it.
Why is that?
Well, because SPX is a broad-based index, not a singular stock.
Okay.
It qualifies for a little-known section of our giant tax code, Section 1256. It's known as the 60/40 tax rule. I read it so you don't have to, and I build it into this strategy so we keep even more of our profits every year.
Wow, so SPX is extremely liquid, it's cash settled, and there are tax perks. That means you can easily enter the trades, you don't even have to exit them, and you keep more money on every single win than any other trade. Sign me up. How many traders, like our viewers, are actually doing this, Mark?
Well, less than you'd think. According to a study from Johns Hopkins, of the $1 trillion in SPX zero DTE options traded every day, less than 5.6% are retail traders like you.
I'm confused. Why is that? Why isn't everyone doing this?
Right now, these trades are an institutional money-making frenzy. They're doing everything in their power to keep it that way. If retail traders get a hold of this, all it does for the brokers is make their trades and profit-taking more difficult. I found a way to flip the game in our favor. You see, when I left the SIBO, I left with the knowledge that only 0.000001, you get it, of people have on how market mechanics work and where the opportunities are, which means the probability of winning is in my favor at all times. That's why this can generate over $200 a day, and for reference, that $200 a day is the base amount. It's pretty much the least amount you can trade.
I want to jump in for a second here, Mark. I'm here today because of that $200 a day number. So when I go and vet trading strategies to see how successful they are, I'm always looking for profitability. $200 a day on just $1,000 invested, the ability to make 20% every day, which we're going to talk about and show some of these results in just a minute here, as well as the cash on other types of trades. The value of that is significant. Imagine making 20% on your money every day. And the $1,000 that we're using as the sample size for this, that's the smallest it could be. So as you scale that up, $200 a day could be $400, $600, $800 a day.
Exactly. I'm using this number to let you know how attainable this is. I don't want to share with you what $1 million account might look like with the strategy. This is what the strategy looks like with $1,000 in the trade. I created this because I want to do something no one else has done yet. Make zero DTE profits possible for anyone. Make it so that anyone can ride the next wave of wealth from trading. And we're off to a great start. In our current community, we have bankers, a ship's captain, cattle ranchers, stay-at-home moms, retirees, all trading this strategy. Some of them had never made a trade before.
Okay, Mark, I'm here for a reason and you know it. And you can say all this, but today I am the viewer's advocate. So I am here on your side. I'm not here to just toss Mark some softballs so he can knock it out of the park. So we've made a lot of claims here today, one of them being this $200 a day number, which you're generating from just 1,000 invested every day. That's a big deal. Think about how that could change your profits from the market if you're pulling that down from trading daily. And that's if you're just trading one of these. If you were to scale up, it could be 400, 600, 800 bucks. But I am not here to just sing Mark's praises. I am here as you in this conversation so that you can understand why this works, what the benefits are, and how you can learn to do this. So I want to get into the cash zone because that really is the meat of this. But before we do that,
Okay.
I was eyeing this Texas bourbon up here. Do you mind if I pour us a drink?
Sure.
Is that okay?
Yeah, why not?
Do we have some ice or something? Okay, perfect. Mark and I are in Texas today. We don't normally get to shoot these with people that I'm good friends with. So it's exciting, and
It
we should
is.
celebrate a little
Yeah,
bit.
let's.
Tell them a little bit. So we're at the Van Zant Hotel.
Yeah, so I moved from Chicago to Austin 4 years ago, and we're at the famous Hotel Van Zant, named after Towns Van Zant. You can read all about him at home, but I convinced Hannah to come here to shoot this, and it's good to see my good friend and go through what I think is a really incredible opportunity for you guys.
Yeah, any excuse to come to Texas and drink some Texas bourbon.
Cheers.
It smells good.
That's pretty good. I have not had that one.
Yum. All right, Mark, talk to me about a cash zone. What is this exactly?
Okay. A cash zone is a target. I want you to think about it like this. Picture a target. You ever do archery when you were a little kid, Hannah?
Sure, I went to summer camp a few times and we did the bow and arrow and the target, whole thing.
Yeah, I actually had to learn how to tie a bow in Boy Scouts. Well, when you take aim at a target with a bow, you're shooting for
The bullseye.
exactly. But anywhere on the target works too. That's why I said even if I'm only 80% right, we can still make money. Think of the cash zone of the SPX as the entire target. And as long as we hit the target, we make money. And the closer we get to the bullseye, the more money we make.
I'm tracking with you. We got a whole target. If you hit the target, you make money. Closer to the bullseye, more money made. So let's look at some examples. I think that's really going to help drive this home. And I actually want to set up the first example for our audience here today myself, because this is how you first explained this to me, and it really helped drive it home. Understanding Mark's cash zone is the key to everything. So lock in with me for 2 minutes while I walk you through this. A cash zone is a range. And as long as SPX price is inside that range at the close, Mark makes money. And that's what makes this fun and profitable, because you don't have to be exactly right. It's within that range. So let's say Mark sets his cash zone from 5,700 to 5,720. That's his prediction for the closing price of SPX within that range. That's $20 wide. All we need is SPX price at 4 p.m. to be between that 5,700 and 5,720, and we make money, right?
Yeah.
That's what we call a 0.35% spread. That's the range. That's our cash zone. Now, on any given day, you normally see a variation of what, Mark?
About 0.75% of a move.
Okay, so our range there is 0.35, and it can move up to 0.75. That's how much it's possible, right? So we
Yeah.
got this move, and on an average day, it does move that much, at least that much. So you do the math. If we put on this trade, we expect to see the probability of hitting that range 46% of the time.
Yes. And the closer it gets to the middle of the cash zone, in this case 5710, the more we make.
Right, 5710 is the bullseye of our target.
Exactly. On this particular day, with our cash zone between 5700 and 5720, SPX price at 4 p.m. closed at 5702, right inside our cash zone. We made 173% on this trade. The cash zone gives predictability, consistency, and risk control, while still harnessing the most powerful market forces in existence, zero DTE options.
Those are 3 benefits that traders always look for. So for you watching here today, that's predictability, consistency, and risk control. And I'd add a 4th too that people want, Mark, affordable. Are these affordable trades?
Less than $200 a trade almost always.
Right.
I quoted $1,000 earlier because that's what I'm trading per trade. That's what we base our results on. Okay. But if you just made a single cash zone trade, it's less than $200. A cash zone example we just showed where the trade made 173%. That trade only cost me $200.
Okay. If you're watching today and you're new to zero DTE options, I need you to know that less than $200 a trade is extremely crafty. The way most people trade zero DTE, these trades can cost up to $2,500 just for a single call option.
Yeah, not with my cash zone. Less than $200 a trade. Here's an example. This cash zone trade cost me $220.
Okay.
I made $489. That's 222%.
Okay, so they cost less than around $200 a trade. Let's talk about your cash zone price range, Mark. So it seems to me that the key to this entire strategy is the cash zone, but it's in that cash zone range, exactly where we put our target every day. How do you pick those prices for that range?
It's a 3-step process, Hannah. I call it my cash zone launch. This is something that I never could have put together without my foundation as a market maker. No way. There are 3 steps. First, I establish market direction for the day. That's step 1 of the launch. Much like a rocket launches, I have to consistently and aggressively pick a direction for the market. Are we trending up? Are we trending down? Are we moving flat? I have a process here that I review with our community every day. Once we have a direction, we need to know how much the market could move in that direction, the width. Is it just 5 points? Is it 10 points? Or is it a more volatile day and we could swing 20, 30, or maybe even 100 points? I do this through statistics and market pricing. Here's what I mean by that. As an ex-market maker, I know what the other market makers are doing to establish how much the market is going to move between that point in the day and the end of business at 4 p.m. Eastern time.
Okay.
I look at column A, I look at column B, that produces my width for that day.
Okay, so column A plus column B is your market width.
Yes.
What is column A and column B? Can anyone find a column A and column B, those numbers?
Absolutely, they're available on any option chain. You just kind of have to know how to put them together, and that produces your market width.
Okay, so what's to stop everyone that's here today from just going and finding column A and column B and adding them together to get the width?
Step 2 is kind of useless without step 1. If you don't know what direction we're moving, then having a market width is kind of useless.
Okay, so if we're at 5,700, even if I know the width is 20, if I don't know if it's going to go up or down, I can't set the target.
Yeah, you might as well just flip a coin.
Okay, that makes sense.
So we've got step 1 established. What direction are we going?
Market direction.
Yep. We've got step 2, how much we're going to move. The third step is timing our trade, and that's really important.
Yes.
Because we want to get the best entry, right? As the day progresses, the market has highs and lows.
Sure.
Within momentum, as it's going up, there's going to be spots where it pulls back.
Sure.
And I want to catch those spots where it's pulling back if I'm planning on going long.
Sure.
And if I know the market's going to roll over, I want to use those spots where it's starting to roll over to establish my bearish cash zone.
Okay.
What I've established is a charting system using volume weighted average price and then statistical volatility to tell me when to enter our cash zones.
Okay. Say I'm one of your traders.
Yeah.
Okay. I'm someone that's trading this strategy with you. So you've walked me through. I know what the market direction is.
Mm-hmm.
Let's say it's up this day.
Mm-hmm.
I know what the width is. We're going to do 20 points. So up, it's 20 points. When I am trading live with you and I go to time my trade, walk me through what that looks like. Is it going to be as clear as once I see SPX price cross this line, I'm going to get into the trade? Is it that clear?
Literally that clear.
Okay.
And I show every one of my subscribers how to establish their entry and exit zones, how to track momentum. And frankly, some of my subscribers have gotten so good at it, they might be better than me at it.
I've actually seen that when we were looking at this and going through some of the results from people, they're almost anticipating the direction and the width, and they're making the trade even before you do.
Absolutely.
Yeah.
It's great. Timing your trade is a science that only a true trader can execute. Meaning, You can get data nerds to look at it all day, every day, but without a feel for the market and thousands of trades of experience that you put your real money into, you won't have the right trade. You have to understand exactly what's happening in the market and exactly when the best opportunity is to catch a move. And the best time isn't when you think it is. Most market action, most volume, moves in the first 30 minutes and the last 30 minutes of trading. People mistakenly think that's when they should hop on board. They're wrong. For cash zone trades, we want to act when there's the least amount of noise in the market. And that happens in the middle of the day. We've established direction. We have the width. It's time to act. Think about it. Would you rather go fishing when there are 100 other boats on the lake, or when there are only just a few out there? The answer, just a few. That's when it's slowest and the opportunity is most clear.
We're going to come back to this. I have some questions, but let's look at some more examples, Mark.
Yes. Here's a cash zone trade from May. Step one, we set our direction. On this particular day, the market opened around 52.60, and we determined it would go up. Step two, we set our cash zone width. The market makers were pricing in a $10 move, meaning we want our cash zone to be $10 wide.
Right.
Around the middle of the day, we set it up from 53.05 to 53.15. Remember, we're always shooting for a bullseye at the center, 53.10. Meaning, we want the S&P 500 to settle as close to 53.10 as possible. On this day, the S&P 500 closed at 53.08, just 2 points from the bullseye of our cash zone. The trade was a 278% profit.
Wow.
Every $1,000 invested turned into $2,780 in a single day.
Reminder really quick for everyone watching, you are in and out of these trades in one day. So you put this trade on that day and you're out of it the same day. So you really make that gain in one day.
When the bell rings, the trade is gone. The cash is in my account.
Deposited, like we said. Don't even have to
Absolutely.
close the trade.
Here's one from April 3rd. The S&P 500 opens around 5,200. This day we determine money will move the market higher. Again, our cash zone is $10 wide, the width. Some days it could be $20 wide, some days it's 30. We read what the market makers are pricing in. That tells us what the width should be. And I'll show you how to do that with me when we do it together live. Back to April 3rd. Market is gonna go higher. Cash zone, 10 points wide. And we set it around the middle of the day when things quiet down. From 52.10 to 52.20, our bullseye is 52.15. We want to be as close to 52.15 as possible at the end of the day. On this day, the S&P settled 52.11, 4 points away. But it turned into a 338% profit.
Okay, wait, I want to do one. March 21st. Step one, the market direction is up. Step two, cash zone is 20 points wide your width between 52.30 and 52.50, so a little wider this day. 52.40 at the center, again, that's our bullseye. We want it to settle as close to that as possible. And by settle, I mean the closing price of the SPX, as close to 52.40. Step three, we wait till midday to time our trade when things quiet down. On this day, SPX closed at 52.41 and 53 cents. That's within $1 of your bullseye mark. So on this trade, you made a huge gain, 551%.
Yeah, it was pretty awesome. What you guys will notice on this trade, the closer we get to the bullseye, the higher percentage our profit. And sometimes we hit the bullseye almost exactly. That's called a pin. And that's happened 7 times in the last 201 days. That's a 100% bullseye. The example we just showed you, this one was one of 7. And on the other 6 bullseyes we've hit, we've made 671%, 342%, 662%,
Wow.
373%, 338%, and 278%, including the 551% we just showed you.
So these bullseyes aren't super rare. I mean, you've hit it 7 times out of 201 trading days. That's kind of likely.
They don't happen all the time, but they happen enough that it's a really, really nice payday, about once a month.
Wow.
What I love most on these days is seeing everyone in the chat room talking about their wins. I mean, these are wins people can trade for years and never make. It's super exciting.
Mark, I have a question, and maybe I should have asked this earlier, but if you think about this, why wouldn't I cast a wider width? So if you think about it like casting a net, if you have a net that's 3 times the size, you should be more likely to catch something. So why wouldn't I build a cash zone that's 100 points wide? Is that not even more likely to win?
Well, you might think that, but a trade like that is for suckers. It's going to cost you 5 times as much money to make a cash zone trade that big, and you'll be lucky to make 50% on it.
Okay.
It's like taking a horse whose odds are 2 to 1. Sure, you're more likely to win, but the payout isn't going to be worth your time.
Okay.
Now, my cash zone, you aren't betting a 60 to 1 horse. That's a fool's errand. We're looking for middle of the road odds. You want a horse that's around 7 to 1.
Okay.
Risky enough that it's going to pay you handsomely for your time.
Okay.
On every cash zone trade I'm looking for it to pay about 7 to 1 or more on the trade.
Okay.
So for every $200 I put into the trade, I should be able to make $1,400 back.
Okay.
That's what makes this strategy work long term. That's how we're generating $200 a day. We don't take just a few home run swings that cost way too much. These are calculated shots.
I'm impressed. That's a professional trade right there. That's controlled risk and optimal output. That's why you've been able to generate these results.
Exactly. Let's look at another one from March 18th. We set our direction, we set our cash zone, we time our trade. This particular day, we're 20 points wide, 51.35 to 51.55. Our bullseye is 51.45, and we settled 51.49, just $4 away. That's a 373% return.
I want to make something very clear here. SPX has 0 DTE options that expire daily, so Mark looks to make these trades every single day. Does he give a trade 100% of the time? No. There are days when the market isn't moving where you want, the pricing doesn't make sense, things might not quiet around the middle of the day, and you won't alert a cash zone trade. That happens less than 10% of the time.
Something like that.
The other 90% of the time, there is potential for 200%, 400%. You just saw as high as over 600% gains if we hit a bullseye. The possibility is there. This is real. These are real returns. When you're looking at these are real money trades that Mark actually made himself. This isn't a back test. This isn't something we're pulling out of thin air. But I want to make sure you understand that if you think you're going to come in and start trading these and you're going to hit a triple-digit winner every single day, you won't. That's not real. And anyone out there who tries to tell you that's real is lying. Don't fall for that stuff. I've reviewed a lot of trading strategies over the years. Some that are highly consistent, some that are highly profitable, some that were absolute trash. But never, not once until today, have I agreed to fly somewhere, sit down with someone, and put my name and face and stamp of approval on a strategy and an expert like Mark. So are you going to lose some days? Yes. Are you going to lose 100% investment some days? Yes. Are you going to have the chance to learn from one of the hands down best people I know who really genuinely cares about his members' success and is 100% committed to the process of educating you, supporting you, making sure that you can learn this? Yes. I've sat here, I've done the math, and the math checks out. $204 a day is real. That's a real number that you can stand on. And unless you're making that on another type of trade, which I know you're not since you're here watching this demands your attention. It demands it. You're going to lose some, but you're also going to win. And when you win, you can hit winners that you never imagined you could hit before. That's real. I've watched that happen. I've sat in the live chat room while Mark has given his trade recommendations, and I've watched people make cash zone trades. I've read the proof. I've seen members just like you hitting doubles, triples, even quadruple profits on cash zone trades. Don't just take my word for it. Here's feedback from members making cash zone trades with Mark. $615 profit in SPX today for me. This one says, I got a near pin on 58.85 with credit entries a little over 1,500 today. I needed that to help end a string of stupid for me. This one, I made around $800 in the last 15 minutes today. I've learned more about how and what to trade in 0DTE over 3 months than I did all last year somewhere else, and I'm ahead on gains. This is actually one of my favorites. Listen to this one, Mark. This is from a member of over a year, and he said, I actually had a discussion with a broker at TD Ameritrade about cash zone trades. I had just learned Mark's setup and was trying it out. She basically convinced me not to do it. Mark showed me the way to make them work and work well. We show you this so you know real people are using cash zone trades and generating real results.
All these traders learn to use the cash zone from my trading mentorship service, 0DTE. I know very straight to the point in a name, but we figured it would make the most sense. This is the most profitable way to take advantage of all the money moving into 0DTE trading opportunities. Again, almost 30% of all trades executed are in 0DTE trades. To not master it is to be behind the curve. It's no wonder this has quickly become the most popular service at Option Pit, our boutique trading education company where we teach anyone, just like you, how to trade profitably with a pro. We have a team at Option Pit that is constantly researching, constantly working, and constantly improving all of our strategies. So, as this opportunity unfolds over the next weeks, months, or years, we'll be ready to capitalize. So, let's talk about what we have for you to outline your success. First, as a member of 0DTE, you get 24/7 chat room access. This is a private room where all members of 0DTE gather to talk about market direction, market width, and make our daily trades live together in a live trading room. You'll be able to see my own screen, my trading platform as I flush out market direction, width, and timing, the 3 essential components of a cash zone trade.
It's direct daily access to a pro trader. Each day in the morning, you'll receive a breakdown of market direction. Mark will walk through this with you live, and it primes you for the cash zone trade coming later in the day. If you can't make these live charting sessions, no stress. We record and send them to you via email. So you'll know going into midday if the market is trending up, down, or if it's flat. That does happen sometimes. You'll also know what the market width is shaping up to be. Around midday, once it's time to execute the cash zone trade, Mark will send you both a buy and a sell alert. So even if you're not at your computer to put the trade on live with Mark together, you'll know what the width of the cash zone is, where we're looking for the bullseye to hit at the end of the day when SPX settles, and the exact strike prices of the trade alert. You can get those notifications on your phone. You can get them also via email. Then there's a log of all the alerts inside of the VIP member chat room. It's called the 0DTE Live Portfolio. You can see every single trade Mark's made, and any new trades are added there each day. That's really important. You'll never miss a trade. And like Mark and I talked about earlier, since SPX is the most liquid stock traded, you're not going to have trouble getting into or out of these trades. We actually have a way to track when market conditions are perfectly primed for a 0DTE cash zone winner. This is something really exciting that I want to talk about because This stood out to me in my audit of the Zero DTE service. In the Zero DTE service, we identify what we call double down days. And these are where we make our biggest gains. And this got me really excited too. We track these conditions with what we call a double down meter. This tells us when we should double our investment because market conditions are perfectly primed for a win. By using our double down meter to 2x our position size on certain days, Mark's actually increased the returns by over $16,000. Remember one of those days earlier when we said we hit a pin when SPX price settled right where our bullseye was? In this example, we would have made $6,620. But right before we took that trade, Mark looked at the double down meter and it told him to double the investment. So instead of the usual 1,000, we put 2,000 into this trade. So we didn't make 6,620. We made 13,240. I can't believe we're just getting to this now. The double down meter is one of my favorite improvements, Mark, that you've made to an already impressive strategy in the past few months.
I couldn't have done it without you. Your auditing is one of the things that really brought it to us. You're always working to make our customer experience better, and this is one of the things you brought to my attention. Every great trader wants to know a better way to let their winners run.
And we've done that simply by taking the days this strategy is most likely to win and doubling the investment. I mean, if I do say so myself, it's pretty genius.
It is.
You don't have to do anything extra. We're not asking you to do something special or change the trade. You just double the trade size.
Over the last 9 months, double downs have improved our returns by 50% overall. So instead of $204 a day, with the double downs, it actually adds up to $226 a day. That adds up.
You're going to see a few other bonuses on the next page, and I need you to click through and read that. There's a button below. Click it now. There's a way you can take cash zone trades for 1/10 the price. So just 20 bucks if you have a small account instead of 200. This could make a lot of sense for you. There's other bonuses too. Mark does bonus sessions with Leisha Leslie, who's a pro trader who worked with Mark on the floor of the CBOE and also trades Zero DTE with Mark now. So you're gonna have access to 2 pro traders really. When you join, you'll get 3 bonus sessions. 1 on market direction, 1 on market width, and 1 on market momentum and timing your trades. So if you wanna do this 100% on your own, you can. Mark actually has several traders doing this 100% independently now. So to sum it all up, you get cash zone trades sent to your phone and email, weekly deep dive sessions with Mark and Leisha, 2 pro traders with over 30 years experience, replays of our live sessions if you can't make it to one, access to our 24/7 member chat room, access to our Zero DTE portfolio, access to tutorials and training on market direction, market width, and market timing, access to a full library of training videos. And on the next page, click the button right below this to see it. You're gonna see all the other bonuses. A way to make these trades cost even less, around 20 bucks a trade, which is crazy. Mark's double down meter, additional live sessions with Leisha, the entire package you need to get started trading Zero DTE options as soon as, well, the next trading day. Mark, I have to say, and I don't always say this, I can't wait to join your next Zero DTE live trading session myself and start putting some of your cash zone trades to work in my trading.
Hannah, you know you're always welcome and Zero DTE. This is a great group. We make some really impressive gains and we have a lot of fun doing it. It's easy to have fun when you're making money.
Amen to that. I think, let's end with the cheers.
Yeah.
Everyone watching today, these results, the training and education we've put together, this is not going to disappoint. Click that button right below us. Join Zero DTE with Mark. I'm Hannah Selner.
And I'm Mark Sebastian.
Signing off from Austin, Texas. Thanks so much for joining us, and click below to get started trading Zero DTE. Little cheers.